The pressure is building at the pumps, in the currency market, and possibly on monetary policy. With global oil supply at risk, the peso under fire, and inflation expected to climb, the big question now is what comes next for the Philippine economy? Joining us now to break it all down is Jonathan Ravelas, the senior advisor at Reyes Tacandong Co. Hi, Jonas. Thank you for joining us.
Good morning, Mikey.
Okay, Jonas, Trump is now declaring a ceasefire between Israel and Iran, but both sides need to confirm this. How should our policymakers and business leaders position for a best and worst case scenario, bearing in mind that all of this is going to have a huge impact on oil, peso, inflation, and GDP?
Well, basically, I guess the key word is more of you have to be nimble, and at the same time, you have to be able to anticipate any changes. So I think the BSP has been ahead in trying to cut policy rates to ensure that growth is sustainable, especially after the first quarter of 5.4%, inflation slowly coming down. I think we can probably say that there's still one more cut before end of the year, assuming that we're not going to see any spikes in inflation. So that should be a good leeway for the economy to try to target a 6% growth this year.
All right. So on to as with monetary policy, we've already cut interest rates twice this year. You're saying another rate cut is expected. To what amount, Jonas?
Probably just another quarter. So that would bring us to 5%.
So that's in August. The BSP is going to be meeting again in October. Too soon to tell how that's going to turn out, especially how everything is going right now. But given, where we are, GDP in the first quarter came in very dismally at 5.4%. Where do you think our trajectory, where do you think we're headed, given everything that's going on right now?
Okay, well, basically, I'm still optimistic at 6%. I think one of the things that we're seeing right now is that the trajectory of inflation is still headed lower. We're actually below the 2%. If we're able to sustain all the fiscal and the supervision of, or shall I say, the guidance of the BSP on inflation, we could probably sustain a growth rate of closer to 6%. You need to understand last year they've done 75. So that should help bring down cost of doing business. I think first quarter was really more of, people took a wait and see because of Trump's tariffs. So, but in the second quarter, we've seen that hopefully a little bit of election spending and the tailwinds of that should at least bring us closer to 6% by end of the year.
All right, that's at the bottom end of the government's 6 to 8% target range for GDP. Taking a look at inflation, if oil shocks bleed into transport and food inflation, given everything that's going on now, we're not going to see that until July. Right. So taking a look at June inflation coming off at 1.3% from May, where do you forecast June inflation and then July, given all the uncertainty that's happening right now and the increases at the pump prices?
Well, basically, for June, I was actually looking at 1.2%, and probably in July, probably slowly inching higher, closer to 1.5%.
Okay. 1.5% inflation. That said, what is the possibility that the BSP might increase interest rates by 2 times in the second half?
Oh, I don't think any rate hikes will be there. Probably a rate cut, one rate cut, and probably if we find out what happens after July 8th, what happens to Trump's tariffs, then if it will have minimal effects, then definitely we could probably see a cut in October.
Okay, talking about the peso, it just hit its weakest level in nearly 3 months, closing at 57.45. We're going to be bracing for higher import costs and a wider trade gap with everything going on. What's your outlook for the peso?
Okay. I think the second half of the year is a bit tricky compared to probably what we saw in the first half. There are a lot of uncertainties arising, particularly whether we talk about oil prices, geopolitical risk. But I think one of the things that people forgot is that we're nearing the end of Trump's pause. Whether he extends it or not, there will be. We've already seen some impact on the tariff, and that means slightly higher prices. So whether we still have a pause or we get to see the effects. For the Philippines, the secondary inflationary and currency volatility could affect us in the second half. And that's the reason why my year end is actually at 58.90 for the peso.
Hmm. Coming into the second half, how worried are you about stagflation when inflation picks up even as growth slows? And this is for the domestic economy and for the global economy.
Well, I think for the Philippines, I'm not as worried, mainly because we still have, again, we're trying to balance infrastructure spending with fiscal consolidation. Compared to the growth, we're still growing in the region, we're still growing above 5%, or our first quarter was 5.4. But globally, yes, it could have an impact, especially if we get to see commodity prices, uh, having an upside bias.
Hmm. Yeah, with that slight upside bias for commodity prices, you pegged June inflation at 1.2%, July inflation at 1.5%. Given that, coupled with a lower interest rate environment, what's your outlook for corporate earnings for the third quarter of the year?
Well, basically, I think for the third quarter, we could see more improvements, probably closer to 10%. Especially if you recall, last year we had 75 basis points. So this will actually already see the benefits of lower interest rates. So this could actually continue to give them that potential increase of at least 10%.
Hmm. Now, given the potential for lower interest rates, 75 basis point cut, and possibly for the balance of the whole year, what's the strategy call for investors right now? What are the biggest opportunities at hand, and what are the mistakes to avoid?
Well, basically, I think the first thing investors should realize is that they should always be invested. Otherwise, they'll be losing out. So, for investors, you need to realize that the 1.4% or the 1.3% inflation is just a gauge. However, you can gauge your own inflation. So, whether it's 10% or 12%, you need to be worried of that, because you need to look for investment outlets that will let give you a yield much higher than the inflation that you have. So at present, the stock market offers blue chip companies, especially after the drop yesterday. Uh, Companies like PLDT, Meralco, and Globe offers high dividend yields. Of course, there are the REITs that also offer these dividend yields. What's nice about this is that over a period of time, probably 3 to 5 years from now, you get to see a recovery, and you have a potential 20% rally. So you want to take advantage of these low prices to slowly accumulate this type of issues.
Yeah, the stability of the blue chips and the dividend plays are always a good bet. Thank you so much, Jonathan Ravelas, Senior Advisor at Reyes Tacandong, for your insights this morning.